One production line that's still going strong at what, 7:45, and will be until 12:30 tonight. How long will this level of production carry on for, though, if coronavirus cannot be contained? That's the question being asked here and at countless other firms around the world.
The business of crashing is a global one. These dummies are sold around the world. The raw materials come from all over it too.
So what is this and where does it come from?
So this is an aluminium honeycomb. The honeycomb is manufactured here in our site, and the raw material for that comes from China or Italy.
A virus that emerged 5,500 miles away is having an effect on the health of companies here.
Corona is creating really havoc with supplies. Nobody knows, we don't know when the supply is going to be resumed.
The concern isn't just supplies drying up. The impact is being passed on down the chain, affecting deliveries too.
Right now, this morning, I was told by a customer in Austria that they cannot take delivery of a dummy because the travel ban there. So we don't know where we're going with Corona.
This one firm alone is bracing itself for a potential drop in turnover of £4 million thanks to coronavirus. And the slowdown experienced here is being echoed through business after business in country after country. And around the world, the cost of this now is running into the hundreds of billions. The fear for some economists is that this could tip the global economy into recession.
No international body yet has put a figure on the full cost, but stock markets around the world are tumbling, and announcements by individual firms are building a bleak picture. Drinks giant Diageo, behind brands like Guinness and Smirnoff, said coronavirus could cost them £200 million in profits as people steer clear of restaurants and bars around the world. HSBC warned it could have to write off more than £400 million in bad loans as companies go to the wall. And 25,000 staff at airline Cathay Pacific are taking 3 weeks unpaid leave between now and June.
10 years ago, China was 10% of the global economy. Now it's 20% of the global economy, and Asia overall is 30% of the global economy. So whatever happens in whatever city in Asia, that has a ripple effects across everywhere. And of course, the UK being centre of the sort of financial activity, we're going to get hit probably harder than others.
With factories in China, the workshop of the world standing idle, supply chains clogging and tourism seizing up, the wheels of trade could soon stall. What effect will that have on the UK? We could find out in just 2 weeks' time, when a new Chancellor delivers his first budget aimed at levelling up, while coronavirus could send economies tumbling down.
Look, after 5 days of tanking, the FTSE finally finished the day just a tiny fraction higher than it started. But ultimately, UK companies are worth tens of billions of pounds less than they were a week ago. And that's a similar story in markets around the world. That sustained drop in markets gives you an indicator as to how investors think, as to whether or not investors think an answer will be found to this soon. Not very likely, they think. One leading economic forecaster tried to put a price on how much this is going to cost the global economy if coronavirus turns into a pandemic. Give or take £1 trillion.
Paul, thanks very much indeed. Well, with me now here, Diana Troileva, Chief Economist for Inoda Economics, a macroeconomic and political forecasting company that focuses on China, and Katie Martin, Capital Markets Editor for the Financial Times. Welcome to you both. Let me start with you, Diana. It was said before the Great Depression in the 1930s, when America sneezes, the world catches cold. With 20% of the world economy, with what's happening in China now, could the same be said for the rest of the world?
Absolutely, in economic terms and in geopolitical terms as well, because the defining feature of where we are is what I call the great decoupling, this all-encompassing geopolitical confrontation between China and the US. And the coronavirus is only going to exacerbate that.
But give me some practical examples of that. Are we talking about production lines, about stuff not being made in China that is not being sold in shops here in the UK or in the US?
the supply chains are highly integrated. So yes, absolutely, the immediate impact in economic terms is on supply chains. But don't underestimate what that means as well for where the global economy and political order is moving from here.
Okay. Katie, we saw stock markets gyrating this week. So yesterday, the Dow was down 1,000 points. Then this morning it was up 300, then it was down 150. Similar gyrations taking place elsewhere. What are the markets most afraid of here?
So it's quite interesting. The markets managed to kind of ignore what was going on for the past few weeks. They were aware of it. It was kind of around the edges. There was a bit of demand for haven assets, for safe stuff, and a little bit of an aversion to risky investments. But it really kicked off this week.
But why this week?
Because of Italy.
Right.
As soon as the virus landed in Italy, it's in northern Italy as well, which is the industrial heartland of the country. Lots of towns have been effectively quarantined. Lots of factories have started to shut down. This is what's
But the Italian economy is a minnow compared to China. So why weren't people panicking when, Hubei province was shut down and, Chinese production, paused for weeks on end?
So there were several assumptions that came around the time that Wuhan was shut down, Hubei province was shut down. One of them was that it could be contained. That's now been proven to be false. The other is that it would be short-lived. We're kind of looking a little bit shaky on that. And the other was that investors and economists were looking at previous outbreaks of diseases. You look at Zika, you look at SARS, you look at Ebola, and you think, okay, it's going to last for kind of this amount of time. It's going to have this kind of impact. Actually, it looks like we're dealing with something quite different this time.
Do you think that the world economy is overreacting to this? I mean, if you look at the actual numbers of deaths, it's tiny compared to the annual number of deaths caused by the seasonal flu. If you look at the number of infections, 80,000 around the world, again, tiny compared to some other diseases. Is the world economy kind of following its herd instincts of fear here? Diana?
I think what's happening is that the disease originated in China. It's an economy that is mistrusted, and it certainly didn't help when the World Health Organization seemed to be pandering more to how it will present Xi to the world than really doing its job. So there was the uncertainty as to exactly really what's going on. At a time when China is way bigger and will have a much bigger impact on the world.
And can Chinese companies recover from what's been happening to them in the last few months? I mean, many of them have shut down their productions. There was a report this week that 6% of them might be filing for bankruptcy. Is that right?
Look, we don't know at this point in time, even though we have seen since the weekend that nearly half of the provinces in China have started to lower their emergency response levels, which is quite suspicious, if you ask me. We don't know if this outbreak is even contained in China itself at this point in time.
Katie, we heard in Paul's report that the figure of £1 trillion that this could cost the global economy if it becomes a pandemic. Is that a realistic figure? Can we even put a price on this?
We can't put a price on it, but in a way, that's what's bothering investors right now. Investors and economists are not epidemiologists. They're not doctors. They don't know. And it's not knowing that's the problem. And to go back to your question about, are markets overreacting? I would say no, because you don't shut a factory for standard winter flu. That's what markets are responding to. It's the shutdown in supply chains. It's the shutdown in manufacturing. It's not, frankly, the human death toll.
But we saw with Lehman Brothers in 2008 that a lot of really good companies went to the wall because of the contagion of fear. We saw in the 1930s that countries practically went bankrupt because banks in America were drawing their short-term debts. Is something similar happening here precisely because we don't know where this thing is heading?
I mean, that's a big question, honestly. I mean, one of the things you've got to bear in mind is what can we do about it in terms of the economic impact, in terms of the market impact? And the big bet that investors are making now is it's okay, the central banks have got this. They're going to cut rates just like they did with Lehman Brothers, just like they've done with every mini crisis we've had since then. But is that actually going to solve anything in terms of stopping the spread of a virus? It's very unlikely. It'll help markets, but not humans.
I wonder what else it might help. Very briefly, is this a kind of dress rehearsal for a world where we consume less, we fly less? The kind of Greta Thunberg paradise is about to come about in a very negative way. Briefly.
Absolutely. I'd say this will exacerbate what is already a process of localization or deglobalization.
Right. What do you think, Katie?
Definitely a possibility.
So we could be, less production, less flying,
Less
just everything
flying,
scaled
for sure.
down.
That's what the airline stocks are certainly worried about at the moment.
Okay.